Welcome to Profiletraders. This is Reza and you're listening to my market analysis for March the 16th. And we are looking at a chart of ES here, S&P minis. In order to see a little bit what's going on, bigger picture, we're going to bring a daily chart and look at it. So basically what we are seeing is that we have now almost a 216 points rally that has not been seen any kind of a correction yet, and everybody that I talk to is pretty much puzzled. Why is it that there is such a rush on the upside? The answer is the following. Number one, we have the Chinese central bank that has been pouring not billions but trillions of dollars into literally what they said, creating another stock market bubble, because they believe if the stock market is in a stage of bubble, the same thinking that Mr. Ben Bernanke had, it will somehow magically stabilize all their problems and everything will be back to be rosy. Number two, you have the European central banks that are doing the same thing, but the difference is that the Chinese have the money. The European Central Bank, his cash register is pretty much wiped out, and now they are forced to do negative interest rates by discouraging the savers who wants to hold and put cash into their saving accounts, and taking that money and injecting it into the stock market in order to create a stock market bubble in their own countries, so that magically when the bubble kicks in, that will also fix all their economic problems. Number three, the Japanese are doing the same thing. So basically in this 216 or whatever point rally that we have, multiple trillions of dollars from only and only central banks have been behind it. Now, of course, we are at a level where we are at significant resistance. And if you listen today to Janet Yellen, which was an extraordinary Q&A session, all I heard from the mouth of this woman was that things are soft, things are soft, things are soft, things are weak moving forward, global situation is still very unstable, and this and that. And I'm asking myself, if everything is so weak, everything is so unstable, and everything is so terrible, pretty much exactly the same situation where we were at 1807, why on earth we are at 2016 and a half with everything being so soft that you still cannot pull the trigger on a rate hike? So to make a long story short, I am full-heartedly believing that we are playing with the fire in this market. I know that people don't like to hear that. I know that people do not want to hear that we are playing with fire, and everybody wants to hear that new ever highs are coming and there is another 400 points of parabolic rally ahead of us. But I really believe that we are playing in fire, and the maximum that I see this move going up is to take the length of this leg up here, projected from the low that we have seen in here, and this gives me a market objective to the upside of 2070 max. Once we do reach there, it will be 270 points rally, and it will test the previous level from where here we literally collapsed on the downside, and again here when we reach that level of 2070 we collapse back to the downside, except that I believe this time once we're gonna collapse, we're gonna blow through this 1800 level without any hesitation. So one has to be very cautious around here, because once this thing is gonna turn down, it is not going to give any warning signal, or it's not gonna come tap you on the back and say get ready, it's happening. One of these mornings we're gonna wake up and this market will be down significantly, and then the move is going to start to the downside. As of right now, first level of support that we need to be concerned with is 2011. If we reject back below 2011 in the overnight and there is follow through to the downside, I believe that we should have no hesitation coming down to 2000. After 2000 we have 90.95, 90.90, and if 90.90 breaks at any given time, I think we're coming down straight towards 1978. The economic outlook is extremely weak. You don't want to believe me, go listen to every CEO of every S&P 500 company that came out and gave their outlook for 2016. And once this masquerade of central bank intervention in these casinos have their effect wiped out, a strong descent will start, and at that point it's gonna be quite amazing to watch it. So for the upside, like I said, if we do not stop right here, assuming that this 2023 is not a short-term top, possibly 2068 to 2070, and at that point I believe that upside objective will be reached and market will be subject to a very severe correction. Now for crude, also a very strong close at 38.5. We are retesting the previous top from where of $39 we dropped down to 36. We are retesting that level again, and we shall see what we will do in relationship to this 39 top that we did put into place recently. Same thing here. Demand wise, nothing has changed. Supply wise, nothing has changed. The only thing that has changed is that there has been a very brutal short covering, or I should say forced short covering, that has kicked in from the lows that we reached at $29, and now market is definitely in a mode where people look at these resistance levels, they come in short and they do not see any response to the downside, and then as it goes further up they're forced to cover. In terms of support here, there is really nothing before 37.75. Until we do not break 37.75, this thing could continue higher for a test of 39. Any given time that we do break the 39, I do not see anything on a daily prior to 40.70. At 40.70, I believe it is going to present a fabulous short opportunity if we do get there. But before we do anything further to the upside, we have to clean up this 39, which in my opinion will not be necessarily easy job to do. Also, let me show you a little chart of gold, which is a complete total slap to the face of the Federal Reserve. Look at the panic buying that came into gold, all indicative that the Federal Reserve's credibility is as much credible as the credibility of my dog here, promising me to never beg again for food. And this is also a significant sign that market is very, very concerned that this Yahoo policy of the Fed is going to create another crisis, possibly from the inflation side, and definitely a very strong signal that people are starting to severely hedge themselves against a very, very nasty crisis coming into the theater near us soon. So a lot of warning signals out there to be concerned with, but of course, for the time being, market is in a la-la land. Everything is rosy. They want to keep it up, bring their retirement money into it, and once they are done with it, I can assure you that a destructive push to the downside will follow through. As usual, this was Reza. Thank you for listening. If you wish to learn market profile or join my trading room, check my website profiletraders.com. You can purchase all my courses and 1 year to my trading room membership from the website. Have a great evening.